What is going on, everybody, and welcome to another technical analysis for the upcoming week of May 27th. Now, before we get started, I do these every week, so consider subscribing, as I do also provide essentially a overall market pulse, which was actually dropped yesterday. Go ahead and check that video out following this video. And before we get started, remember to hit the like button and let's get this technical analysis for the week going. So I do appreciate y'all for being here. Let's see what we got. So ultimately, for this past week, we've had that big sell off last week. Essentially, what we really saw towards the end of the week was the FOMC meeting notes. We did get a pullback here on the meeting notes. Essentially, the market was saying that, or the Fed was saying that they are looking at potentially even raising rates again. So that's where we got this particular move coming down. But ultimately, we did gap up because of Nvda earnings over the weekend, or that particular Wednesday and Thursday evening, and then we started selling off pretty heavy coming into the day. Did a retest of all-time highs, and then started selling off really heavy, bounce off the 20-day EMA. So essentially, where we're going to open tonight is going to be important. Now, tomorrow is a holiday. Monday is a holiday, Memorial Day. So the market will not be open. So we cannot trade tomorrow, but it'll be interesting to see where we do open up, because if we do start opening lower and start retesting that 20, that could be a big issue. Again, something I've talked about is we have been struggling to hold this all-time high. This is something we saw back, and I think it was about 2000. Yeah, this was not 2004. Let's see, 224. Back in 21, when the market really started to like stall before we really started having that heavy selling, every time we would hit a new high, we essentially kept retesting around this area for a while. So we'd hit new time highs, then we'd just sell off within the next hour. And it was a real struggle here before we started selling off pretty heavily. Again, so when we started getting high inflation and everything else as well, and then started talking, and the rates started really increasing. And then now at this point, again, I talked about last October a lot, this particular drop here. If they didn't cut rates, we would have essentially been going for a new low. So they cut rates right in time. This is a very critical level, that 4,100 level. They cut right then, and that's we've been going up ever since. And that's typical for a cycle for the market to push up after rates pause. And so we are seeing that to be true again on this cycle. So again, we'll be interesting to see how we do play this. It is a new high. So expecting if we do get any sort of pullback, it would be a new low. We wouldn't see the 500 level. Maybe we kind of float roughly around the 5165. But really, our ultimate support here is at the 5250. So again, we want to see if we're going to continue to chop around here, which again, I wouldn't be surprised. We are still waiting for another big event to kind of occur. We don't really we have some events this week that could play out pretty big. But again, ultimately, it really just depends. We have the core PC on Friday, which again is more of an intraday play. We have GDP coming out on Thursday, which could be intraday as well. They can always produce some random number that could freak the market out, but we don't know. And like I showed on the 1 hour time frame here, this is why I talk about an intraday play, is we get those FOMC notes about higher, essentially not only higher for longer, but the potential of increasing rates. And as soon as they came out around that 2 o'clock, the market just sold off heavily because of that. But then again, bounced right back because of the earnings. The market is very dumpy though, in general. Now I do trade on the 1 hour and I do intraday trades, but ultimately I really, after every day, I really zoom out and kind of look at the daily and see where things are at. And as of right now, this whole zone right here has just really been, it's been hard for the market to hold, to make new all-time highs. Again, it's a low volume month as well. So you got to keep that in mind. So once we start kicking off new earnings, there's a lot of potential things swirling around in June. This is the last week of May, so we get into June. We're going to get non-farms next week, so do keep that in mind. That's going to be an important data set that does drop, especially if we continue to see more decline in employment. So just keep that in mind. But right now, I wouldn't be surprised if we actually started selling back down to the 52.43 this week, held that, and then continue to chop going into essentially non-farms next week. So again, it's a short week, but we'll see what happens there. And again, something I always reiterate is that right now we're in a very interesting situation that at any point bad news can drop. But again, ultimately understand we don't know when that could happen. Again, they've been trying to push it off to the beginning of earnings cycle. That's why I say it's what's really important for the beginning of earnings cycle, because they're always front loaded. So just keep that in mind. So that's what I'm expecting this week is for at least the index to chop around, but I wouldn't be surprised if we get a pullback a little bit more and then kind of hold this level. If we do break that level and start selling off, again, what you're really looking at is the 51.66. We'll see what happens there. There's a speed bump roughly around the 5,200. But we'll see what happens. Again, we don't want to jump too far ahead of ourselves. Typically for the week, I just look for the next zone and then that zone right after that, and I kind of just play those two zones. Right now, it's all price discovery up here. I don't really see a catalyst to keep pushing us up. Yes, Nvda did really well, but it is, again, very overextended. It's not saying the market can't push up. The market can continue to push up. Again, I do believe in the story and the thesis of chips and AI. But again, my biggest concern there, something I always talk about, is the resources to produce those chips. And then now with all the stuff going on with China that I did discuss in the analysis, you can go check that out. So that's what I'm looking for, the index there. Let's take a look at Bitcoin. For this week, again, it's kind of breaking out of this channel, which is good to see. So looking for a potential retest at some point this week to try to break the 75. Again, if it can break the 75, this thing might start really ripping. Typically, again, since the halving, it takes about 6 months, and it's only been about a month, 2 months. So we still roughly got around 3 to 4 months before this thing really starts ripping. So I wouldn't be surprised if this channel just continues to chop when here. Could strongly do that. These downward channels, again, there isn't a lot of data here to really show that this is actually a channel, but it could potentially break out. We'll see what happens there. But ultimately, kind of really looking for this thing to go sideways. Go ahead and delete this off of here. And then we'll see what happens. I mean, there's a lot of good catalysts. Spot Ethereum ETF got approved as well. So just keep that in mind. Now they're potentially looking at Solana. So we'll see if that is true or not. So you do have some good news coming into crypto. A lot of stuff is getting around crypto. A lot of the elections coming around the corner, and a lot of them are talking about elections as well. So you got a great catalyst for this. But again, on the same token, I'm going to re-emphasize this, is that if something does happen with crypto or something happens with the market, crypto is going to go along with it. Again, you have to understand the economy in general affects all markets. And so it's not just going to break off away from the market. The market's crashing, and if the market's crashing, that means the overall general sentiment of the market or the economy is really bad. So these are things you have to keep in mind. So with that being said, we'll continue to watch and see what happens here. But I do like the consolidation. Kind of really expecting, if the market starts selling off, I expect there to be a wick to come down here. I think it would be fairly quickly because it's crypto, down to the 45 before that big bull run, which may happen in 3 to 4 months. And again, a lot of people are emphasizing that something big event's going to happen in June. We'll see if that's true or not. But as of right now, we're just going to go off of what we see. And right now, we're seeing some good consolidation continuing to go. Something I've always talked about anyway is when you see a nice consolidation like this, you'll see a big liquidity spike, and then it'll rip back in where essentially the big institutions get in, and then it'll essentially correct back where it was, and then it'll start ripping up. So that's kind of what I'm expecting there. But again, we'll see what happens. Let's take a look at gold. Now, this is something that's a little concerning because you kind of see the whole opposite play here with gold, as you've seen it kind of chop and then break out and then pull back in. Um, Continue to watch and see how this channel plays. I wouldn't be surprised if gold stays in here as well and then consolidates until we get that event that essentially causes the Fed to start cutting. That could cause this thing to really start ripping out of here. We do have hit at all-time highs, high in gold just recently. So again, it's this essentially 180 mark was a hard ceiling for a very long time. But now we finally breaking out because of the concern of the dollar. It is wicking though, so just keep that in mind. May just get a short pullback like I talked about, maybe even down to the 200 before it does one last test. It may even pull all the way back to the 190. Again, you're gonna have to have some real positive news for this thing to pull back that low before it does rip. But like I stay with Bitcoin, it could be both in the same category. You may have a big rip down and then a massive rip up. Could be a great case for that, right? If whatever event it is, and then that's going to cause the Fed to start cutting. But until that point, maybe the market just continues to grind up and this starts pulling back enough. And then that event happens, and then it just really starts ripping from there. Could be a strong possibility. What it looks like, technical wise. So we'll see if that's to be true. Tesla again. I love this wedge here. Looking for a massive rip out of here. I think towards the back half of the year, this thing will really start getting that. Like most stocks, you typically buy around this time anyway, and then kind of hold to the back half of the year and you get massive rips. So really kind of just waiting for this thing to consolidate and essentially bounce back and forth between this 225 and this 165. So far, it's been holding really well. That's definitely a positive sign. I was a little concerned with this little dip down, but again, got pulled right back in. So I really like consolidation. Again, Tesla has done this for a very long time, consolidates for a long time, and it has those massive rips. So as long as it continues to hold the 165, like I said, and play up to the 200, I can see this thing chop and potentially even all the way to the end of the year, unless we get some newer. August, we're supposed to get some news on FSD. That'll be interesting to see what happens there, and then we'll take it from there. So really liking Tesla there. Palantir, again, another company I really like, but I want this thing to break down. I like the 20 because it's not too peak, but again, this run that it's had to this point has been absolutely absurd. So I'd really like it to break this wedge and at least get back down to the 20 here, the 20. This is actually the weekly here, so I'd like it to break down, at least get under 20. Even if we start selling heavy, I don't know if we're going to break 15. I don't know if we're going to see these lows, even if the market starts selling off heavy. But would really like to start accumulating it right under the 20. So this won't hold forever. So just waiting for this to break and then ready to pounce when that does happen. So, but yeah, that's what I have for Palantir. So let's take a look at Nvda. We'll just take a look at this because of the craziness that's essentially gone on of this over the past couple of months. Again, absolutely crazy run. I do believe there will be some sort of reset of this. I do believe it's this company, it's got evaluations of like 1,300 to 1,400. Seeing a lot of price upgrades. Again, it hit that 20 and bounced well. I do believe there'll be a downfall of this eventually. There's a 10-for-1 stock split. I believe it's in July. Yeah. June 10th. So once that actually occurs, I think a lot of people will come in. So this thing will probably continue to run till that stock split. Again, they like to do a lot of these things because of the fact that you are getting into trying to recession proof and try to dilute or essentially hold some of the value that it's earned at this point. So that's why you do stock splits. So it'll be interesting to see how well it does move after that. Typically, stocks don't move as well after some major stock splits like this. So we'll see what happens. But again, they're trying to preserve the value of the stock because of what's going on with the foreseeable future. So right now, price discovery, we'll see how high this thing can go. I think it can go pretty high before the stock split. I wouldn't be surprised if it hits, 150 at least by then, maybe even 120 or 2100. So we'll watch how that goes. PayPal is a good one. I keep bringing this one up. I really like this one for the foreseeable future. I would like to try to pick some more back up around the 58 mark. And then again, if it drops down even to the 50, add some to that position as well, and then potentially start heading up. But again, I really like this zone. Again, it's kind of been buckled down by the 57 or the 67 mark here. But I do like this range. It's back in this short little range. We'll see if it bounces out of here or if it actually breaks down and does come back into that $58 level. But I do really like PayPal. And as you can see, it can recover a lot. Again, we have to remember they just replaced the CEO. I know these numbers are this 310 seems very far-fetched now. And you shouldn't really go after this because a lot of, again, just 2 years ago, a lot of these businesses were at ridiculous numbers for no particular reason, right? And then so there's been, and the CEO pretty much kind of like drove this company in the ground. They weren't really doing anything exciting. Now that he's gone, they get a new CEO in place of him, and I really like what he's doing. So again, I mentioned this multiple times, but I do believe this will pull back, at least get into the 58 for a little while. So kind of looking forward to add a position there. Then again, if we start selling off heavy, start pricing in a recession, kind of hoping that happens within the next couple months. We'll see how June turns out, but another good spot to potentially add is at the 50 mark. Again, this thing can go all the way down 30. We don't know. I don't really think it's going to go that low, but anything is possible. So you have to keep that in mind. So really watching this one closely. Then let's take a quick look at Apple. Would like to grab a little bit of Apple as well. But again, still all-time highs. This thing needs to get rejected and come back down. I'm not buying Apple up here. I'd much rather Apple be here at the 168 and then buy a little here and buy more here at the 150 is really kind of what I'm looking at there. So Apple needs a bit of a pullback before I even consider Apple. And then really kind of looking down at this zone, the 132, I'd definitely go really heavy at the 132 if we get to that level. Again, these things always trade in these levels. You just have to be patient for them to pull back. That's why I like those zones on the higher time frames, because it kind of lets you see, if you just be patient enough, set your buy order to these zones, and then just let it sit. And then when it hits that zone, it'll buy. You can automate all those orders as well and just let it sit. You can do 90-day orders. And if it doesn't ping, then you can just renew that order until it does. So. And that may not always be the case, but if you're playing like I do for like 6 months in the future, I don't like to look any much further than that. Especially a company could change a lot in 6 months as well. You may not want to be invested in Apple in 6 months because something can change really quickly. So, but do want to bring that one up and kind of look at that one a little bit more. BA. Now BA has been interesting. I talked about this level. Try to go back and try to reclaim this 200, but it fell short of that and started selling off pretty heavy. We'll see if it can hold the 166. Again, if it breaks the 166 level this week, you got a pretty big fall here before you really start getting some. That 150 mark is a little speed bump support, but your real dip buy here is about 124. Again, more planes, more problems. We'll continue to see how the stock does. But again, this holds big on value. So if value starts losing slippage on value, it's not good. And then, and if you lose slippage on value in financials, typically tech follows soon after. And then, we're already kind of seeing the decline on gold, which is not a good sign. There's a lot of worry and concern. Again, if all different industries and markets start selling off, that's a huge concern. So just keep that in mind. Something you definitely need to be paying close attention to. So, and then we'll look at JPM. Again, it looks like a break and a retest. So financials look really strong right now. Again, in price discovery, if it can reclaim the 205, this thing could really start ripping. So really kind of watching there and seeing what's going on. But again, kind of getting a drought period, so we're going to have to wait on some data, see if there's anything specific that could potentially be a good play. I'm trying to think if there's any other potential plays here as far as I'm looking at. May pick up some of these other ones here, but not too sure just yet. Oil in itself is pulling back. Again, really want this thing to pull back more, but as of right now, it looks like it may actually break. If oil can essentially break, if ExxonMobil can break this 113, come back down to the 91, really like a bigger pullback. These little miniature pullbacks, I don't really care for that because it essentially means it's just going to pop a little bit and then fail before it hits the top range, and then typically dive down to the next level. Typically, if you want to buy anything, this is a good tip as well, is to let it break 2 zones, and then that's kind of really your buy, at least your first buy, depending on how big it is. You typically start going heavy, and then if it breaks lower, you can go a little bit lighter, and then DCA in is something I've always kind of done on my long-term swings. It works really well. But if you can definitely maybe buy light here, but really you really want to be buy heavier in a zone like this. But so yeah, we'll see what happens. Again, this week, not really expecting a lot. It is a short week, so you can't really expect a lot. I think we're kind of really waiting on June and seeing what the new month brings, and also what's going on with non-farm is going to be extremely important. So with all that being said, again, if you made this far, I do appreciate you. Go ahead and drop a like. Till the next one, I'll see you guys later.